welcome to the Trading Market Technicals Morning Call video for Friday, February the 7th. That bounce did play out. Dow Jones up 188 points, NASDAQ up 45. We have Russell up 10 and the S&P up almost 22 points. So not a bad research call we had yesterday as far as getting the markets to bounce. We had good indicators telling us here that we are due for a bounce. I get a few emails saying, well, how did you know the market's going to bounce? I don't. We don't know that the markets are going to bounce. I wish I did, but unfortunately we don't. We just take our analysis and we apply them to price action, what is happening during the course of the trading day. Now, so we had some interesting developments. First of all, last night, Asia followed through with our U.S. markets, closed up pretty nice. Hang Seng was up like 200, Nikkei was up 307, Shanghai up 11, so not bad follow through. And then now the European session, we're basically trading slightly up, more than flat if anything, waiting for that non-farm payroll numbers to come out at 8:30. So that's going to be a big number, guys, bigger than usual. And why? Because last month we had a terrible number. They only showed 74,000 jobs. So this number needs to come in at least right on target, a little bit better, and I think it will. There was terrible snow, so unfortunately that does affect any type of hiring and jobs and stuff like that. So we'll see what happens today, but I think that's going to really dictate the tone for the next few weeks. It usually does. When you get something that's in line, then you get back to all technicals, but if you have a big blowout number or a dismal number, as you can see, pretty much most of January was terrible. So this is going to be very important for non-farm payrolls at 8:30. Therefore, I would suggest not to do anything. If you don't practice the 15-minute rule, you should do it today. First 15 minutes, no trading. Wait for what the market does, and let it give you a buy signal and or a sell signal for that matter if you're day trading, and really dial down and say, okay, this is what I'm going to do. And there's going to be higher volatility today. You know, I call it the wild west. So you know, reduce your share size. Don't even trade at all. You know, days like this, I know a lot of people don't even bother trading FOMC, and they don't trade non-farm payroll because it's not worth it. You know, I think the rally is suspect, and I'm going to show you why. That does not mean that we can gain some big momentum and continue to rally higher. I will tell you that the markets, as you know, are crazy. The volatility here is nuts, and we need to really take a step back. When you see that crazy volatility, you want to just give it a step back and say, hey, you know what? I'm not gonna. You know, we always want to protect profits, right? That's the name of the game, right? Your money is where you make money, so that's very important. Is protecting profits. Okay, so you know, obviously, I mentioned yesterday about the stocks above the 50-day moving average. This is a usual area for a bounce. Sure enough, you know, we did bounce at this particular time, right? VIX. Great indicator, guys. This is a great, you don't have to trade volatility, but this is a phenomenal indicator. As you can see, when we get these extremes coming out of the Bollinger Bands, don't even have to get up here, but if you get these extremes, boom, market sells off. That gives you a buy signal for equities. Now, why? There's a lot of fund managers, long fund managers, they can't short the market. So what they do is, like big whales, they come in and they just buy the VIX, and they just doesn't matter where it is, they just buy it. So you reach these extreme levels where the volatility really shouldn't be there, and that's because of portfolio managers and fund managers protecting their book, and they just go out and buy volatility, right? And that's the reason why the VIX actually comes back in. So now we have a buy signal, a true buy signal of the markets. Now, remember, we have non-farm payroll numbers, so that could trump the charts. Remember that. News will trump the charts, whatever it's telling us. But I always think that whatever news is coming out for the next day, it's shown on the charts. So it could be a good day today. Could be a good rally up. We can continue with the rally. But remember, guys, you got to be very cautious here. Okay, McClellan Oscillator. We were here just right around this area, and now we're back at the 20-day moving average. So we're coming into some resistance, and I'm going to show that to you in the chart segment. Now, just look at the EEM, the emerging markets. This really started to sell off about 2 weeks ago. Now we're just kind of back testing this 20-day moving average here, and we still got to fill this gap, and there's a lot of upside resistance. As you can see, the 20, the 50, and the 200, we got the death cross. So to me, I don't think the markets are out of the woods at all. So keep an eye on the EEM when you're doing your own analysis. I think it's a definite good. It's an ETF for the emerging markets, but obviously it tells you what's going on, and this does not look pretty. Okay, so that's why, to me, I think that we're going to have a little bit more downside pressure after this rally, this little short covering rally subsides. I think we're going to have some further downside here. Okay, now let me show you. Let's get into the chart segment. Oh, you know what? Before that, let me just show you USO. Here's the ETF for oil. Now, oil had a phenomenal run yesterday. It actually broke above the 200-day moving average in crude, and then now we had basically gave it all back at the end of the day, and now we're actually down 40 cents. So we have some heavy volatility in crude oil. I like to see this cross and really start to separate and really give us that buy signal. We are in the zone for a buy signal, and we've been consolidating. I still like the daily chart, and I'll show that to you in the chart segment, but I wanted to show you the bullish percent. This is getting ready to cross. Might just kiss, which will probably happen today because we're down 40 cents right now, and then maybe roll one more time. Let's see if it double bottoms, make a higher low from this low, and then start to revert back up again because we're deeply oversold here. So I think that we could actually start to really rally sometime next week. All right, so we have the yen, right? As you can see, the yen got decimated yesterday, and now it's up slightly this morning. But what's happening here? Just really a bull flag into this Fibonacci cluster of resistance here. Okay, we have the 38, the 50%. We have some clusters up in this area here, some resistance area, and now we're just really bull flagging. We're still above the 8, so this is something we're gonna have to watch here. Again, bullish pattern. We are making series of higher highs and higher lows. There's nothing bearish about this at the moment, right? And that's not going to bode well for stocks. All right, so now we have let me get that out of the way. We have the ES. Now, I like the pattern that we broke out of this bear flag, which is great, right? And we are at above the 8 now because we're up about 4 handles. But let's just talk about yesterday's nice big engulfing. So we're almost taking out. We still haven't taken out this area 1775. Okay, look at the volume, and that's the key, guys. Volume did not confirm price. We have dropping volume. Volume has been dropping here. So this, to me, is a warning sign. I would have loved to see volume at least back up in these areas here, but it's not. For the last several days that we've been at least trying to grind higher, we've had decreasing volume when you have increasing distribution. That's not good. That means that every rally is getting sold into. So now, this is going to be the question here. This is the area where I would like to look for a shorting opportunity. 1785 to 1795, even 1800. Anywhere within a 15-point range, we have some overhead resistance. We have the 20, we have the 50, and the 200-day now all pointing lower. Now remember, that 50 in red and that 200, if that crosses, that's a death cross on a daily chart. Not too pretty if that does happen. A lot of fund managers looks to see what happens. Now, this doesn't mean that if we have some good numbers and the market likes the non-farm payroll report and we blast higher, we can literally go right through that. Do we get short? Absolutely not, because we did not get a sell trigger. We look at our areas to short and then we wait for a trigger. If it doesn't happen, then the next pullback, we look to get long market again. Okay, but I don't like this. This here gets me a little nervous that we don't have the volume that confirmed price. Okay, we do have now the stochastics rolling above 20. That sounds good. We broke above on the RSI. That looks good. So the momentum indicators are pointing to higher prices, but price and volume did not. So something interesting. I just wanted to point that out to you. Another area of resistance right up in here. As you can see, this is the hourly chart. Just want to show you. We're into this big area. Now, the 50% is right up in here. Okay, 50% retracement. Anywhere in this area here, the 38.50. I'd like to see the market really get it to this 50 to 61.8 right up in here in this fib area. This would be an ideal short candidate right up into this resist. You see this little supply? This is the area here. So this is the area I'm concentrating on, 85 to even, let's say, 1800. Okay, so that's what I'm going to be watching. All right, now we have our spiders, GLD and TLT. Bonds drop, yields are rising. Remember, if we have a good market, look for the builders. The builders will do well in high interest environment. They're interest sensitive. So right now we have bonds going. This does look good for stocks, though, right? But what happens is gold is just sitting there. I think gold's going to explode. One shot, really nice, run up higher, get everybody long, and then dump. And I think that's how that happens. Remember, the markets are made to fool the masses. Here's the spiders, as you can see. Now just really kind of back testing here. But so far, so good, right? We don't want to see gold, and we don't want to see bonds actually run higher because that'll actually put pressure on equities. All right, let's go right into the S&P 500. As you can see here, real just clean chart. We held a weekly chart. I wanted to show you today. Now is the last day, so we don't know what happens today. But as you can see here on the weekly, we're holding higher highs and higher lows. We have bullish symmetry. So far in the longer term picture, everything is still okay. We have the S&P daily. Now we're back testing, right? This 2012 uptrend line here. So this is going to be a real big spot here. And as you can see, we have the 20 crossing over to 50. We're still above the 200, which is good. And we broke down for you. I'm just going to take this off while we're at it. And as you can see, now we need to really get back above here. Today's really important, guys, because I think if today we can rally with some volume behind it, I think maybe, just maybe, we can get up to that 1800 area, and then we would really need to reevaluate it. Again, I think the rally is suspect because of volume. There's no volume confirming that price action. And we have the transports. Now, transports, again, here's our leader, right? Volume was much weaker. No, I wouldn't say much weaker, but is lighter than the previous day. But at least we had some better volume than we did in the marketplace. That's a good sign. Okay, we want to keep this up, and I want to break this area here. I want to break out of this area, and I want to see the transports really start to move higher. Okay, here's the IWM, and as you can see here, the Russell, which is our secondary leader, is really weak, not doing well at all. We can't even get a crossover above the 20 line on the stochastics. MACD just literally opening wider and wider as we get away from that signal line. Histograms making lower lows. This is not good. We just barely just closed above. So watch the IWMs as well during the course of the trading day. Qs did okay. We had some good technology companies kind of moving a little bit higher here. So Qs not bad. Remember, that does get pounded if Apple starts to move lower, heavily weighted. Now, good spot. We got a little recovery in the Dow, which is nice. Here's October 9th low, hit the 200, rallied up. Now this is the big guy. This is where all the managers look at. This is the Dow. Most of them do anyway. We're back above it. That's a good sign. Now we got a lot of work to do to even get back above here. So we got to get back above this horizontal resistance. Once we get above there, maybe we consolidate and then start to move higher again and get these moving average to move back up again. But as you can see, we had some extreme volatility as the Bollinger Bands are extremely wide. Now we need the Bollinger Bands to start contracting again and get closer and closer and have something like this. Once you get these bands closer, that means now you have pressure building, and then boom, you break back out again. All right. Take a look at GLD again. We're still above this, holding this line here, and we're holding true to that 50 and that 20. So we get back above it, we should have it. I think we're going to explode higher one time, get above here, and then the market sells off again. Okay. Once you get that uncertainty out of the markets, then I think gold just sells off. And I think that's what's going to happen after we get through this. Here's the XOP, oil and gas. I'm just showing you some of these. Another thing too, guys, what I'd like you to look at the miners, the metals and mining sector, the XME. Dial into that. You have FCX, BHP Pilton, Vale. You got because I noticed on the scan yesterday we had Caterpillar and John Deere. A lot of these, they're starting to really break out, and that's a big, big stock where a lot of managers like to accumulate. So keep an eye on that. Either the market's going to roll over and then catch is going to sell back off again, but that might be something interesting. I'm going to put that on the charts for a Monday segment. All right, XLE. Again, right now we have this bearish rising wedge that broke, so that is a sell signal, right? Next back test and fail, you could actually get short. The longer term picture, I do like the oil and gas explorations, the service sector. Excuse me, this Schlumberger, like I mentioned, Halliburton and Baker Hughes. USO, just want to show you up in here. We need to really get above this. Once we get back above this, guys, I think we're going to get a real quick shot up to the 38 area. And I do like the oil trade a lot. And as you can see, interest rates rising, home construction, ITB, big move back up again. And that's what I said. If the markets are weak and you get a good day, look for stocks that have just been selling off in sympathy. They're going to run right back up again. And here's the XHB. Finally, look at this. XHB, which is the home builders ETF, starting to break out again. And let's look at some of the home builders. Look at Lennar. Boom. Big move up again. That is exactly what I'm looking for. Just like this. Nice horizontal trend line break. Look at that. That is fantastic. And I've been talking about this since December. The home builders are going to be the big play of 2014, along with the banks. Remember, the banks obviously sold off because we have a risk-off environment at the moment. But when the banks start to move again, you're going to see them really start to chug along. And take a look at the Pulte. Looking good. And here's KBH. I tell you, I like Pulte Homes and I love KBH. I really do. And even Lennar, if you can get a pullback on Lennar, I'd buy any weakness into these sectors. And of course, here's the banks. Okay, banks didn't do too bad. Got that back test here. Now, banks has a lot more work to do. Again, look at the volume, lower volume here. Not too pretty. So to me, this is suspect. But again, if we could start chugging along, you'll see other stocks in that ETF start to follow. Take a look at Citibank. You know, obviously this stock has gotten decimated all of January, and now look, we're just starting to retrace here. It has a lot of work to do. I'm not looking to pick a bottom here. If you own it, fine, hold on to it. If you don't own it, I wouldn't be looking to buy here. I want a nice base building area above this line, and then start to really break back up again. And let's get those averages starting to move on the upside. JP Morgan, nice big move. If anything, JP Morgan will be a better buy than Citibank at the moment. Okay. Now, Goldman is another story. Goldman here, I don't like it. It's below the 200-day moving average. It needs to get back above the 200, base a little bit more. This has a lot of work to do. Stay away from Goldman if you're looking for banks. You know, for a day trade, that's one thing. And then lastly is Apple, as you can see here. Okay. All right, guys, very interesting. This morning's going to be a real big number, non-farm payrolls. Please, if you don't like the volatility, step aside. There's not a problem. Just sitting in cash for a little bit until the markets make sense to you. All right, have a great day. Be careful out there today, and we will speak to you on Monday.